Hello everyone, welcome back. I'm Anselm. This time, Bitcoin's decline is not just a simple price correction. Recently, Bitcoin briefly fell close to a 21-month low. At the same time, volatility in US equities increased. US PCE inflation rose to a 3-year high, and market concerns over interest rates and liquidity began to heat up again. So this decline should not be viewed only as a problem within the crypto market itself. More accurately, macro pressure is repricing risk assets. Bitcoin today is no longer just a crypto asset traded on exchanges. As institutional capital, corporate reserves, and traditional financial participation continue to increase, BTC is becoming more deeply integrated into the global risk asset system. When inflation rises, expectations for rate cuts decline, and US equities start to fluctuate, capital becomes more cautious. Technology stocks, growth stocks, and crypto assets all come under pressure, and it is difficult for Bitcoin to remain completely independent from that environment. The rise in PCE inflation this time is a key variable. If inflation continues to come in higher than expected, the Federal Reserve may keep interest rates higher for longer. The higher interest rates are, the higher funding costs become, and the greater the pressure on high volatility assets. But in my view, looking only at price is not enough. What really matters is whether this decline has triggered deeper changes in capital flows. For example, are long-term holders transferring large amounts of BTC to exchanges? Is stablecoin liquidity continuing to decline? Is leverage in derivatives being liquidated in a concentrated way? Are miners increasing their selling? If these signals deteriorate together, then market risk will indeed become higher. But if this is mainly driven by macro pressure and leverage clearing, while long-term holders have not clearly loosened their positions, then it looks more like a round of risk release rather than a complete breakdown of the trend. Based on my on-chain observations, the Bitcoin market is currently being influenced by two forces at the same time. On one side, there is macro pressure. Inflation, US equity volatility, and interest rate expectations are affecting short-term sentiment. On the other side, there is on-chain capital, long-term holders, accumulation wallets. Stablecoin liquidity and corporate reserves determine whether there is support at the bottom of the market. So going forward, the key is not just whether the price can rebound, but whether capital is truly leaving the market. If macro pressure continues to rise and on-chain capital also starts to weaken, Bitcoin may remain under pressure. But if long-term on-chain capital stays stable, then this decline is more like a repricing of risk, rather than a rejection of Bitcoin's long-term logic. Overall, Bitcoin's fall to a nearly 21-month low shows that market pressure is increasing. But what truly matters is not how much it has fallen, but whether capital is leaving. Price is only the result. Capital behavior is the cause. I'm Anselm. I don't make price predictions. I focus only on breaking down the capital behavior that is really happening on-chain. If you want more analysis on on-chain market dynamics and capital flows, remember to subscribe and follow. See you next time, and let the data speak for itself.